So glad you could join us here on a Monday. I'm Marlon Bowling with you. Hope you had a good weekend. It's time to analyze what to expect in our trade for the grain and livestock here this week. We're going to be joined by Brian Hoops. He's the president of Midwest Market Solutions. He's in Springfield, Missouri, and he joins us right now. Brian, right off the top, news from USDA. We had another overnight export sale to report. This time it was, you guessed it, 132,000 tons, and it was soybeans, but it was sold to unknown destinations. So the cat is not out of the bag as far as actually who purchased it this time around. The problem is, I wanted to take a look at our overnight trade and see just what those market prices were doing here. Not a very strong market. We didn't see any follow-through buying after that turnaround reversal following the USDA report on Friday. We had the corn market showing December down 6.5 cents at 5.11 as we got to the end of the Globex session this morning. Now, if we look at our soybean trade, we had the November new crop contract down 6 at 12.80 and a half. It had been trading about steady at times overnight. Now, if you look at the wheat market in Chicago, you had the December about 7 3/4 lower this morning at 6.80 3/4. That was almost on the low of the overnight trade. It's almost a dime off of our overnight high. In Kansas City, you had the December contract down 6 at 676 and a half. And with our quotes provided by bar chart here, we had the Minneapolis spring wheat showing December down 10 3/4 at 868 per bushel. And in the cotton market, you had new crop December trading at 92.98, and that was down 52 points overnight. Brian, let's talk about this a little bit. What is the setup here? Why the pressure on the grain markets? Do you think this is all harvest related now?
Yeah, good morning, Marlon. Hope you had a good weekend as well. So you look at what happened on Friday after USDA came out with their report. We saw end user buying lift values. So this is commercial related, end users that are doing some forward coverage going into the harvest. This is perfectly normal, how things normally transpire. Commercials buy on weakness, the funds sell, and that's what we're seeing overnight is the funds selling. That's what's driving our prices lower. So as we get into the $5 support area once again, expect to see more of that end user buying coming into the marketplace. Now, that doesn't mean that that is going to be the low for harvest. Usually that occurs right at the end of this month, early October. So we may be, another 3 weeks away from putting in our harvest lows. I heard a lot of people talking about harvest lows we're in after Friday, and I just don't think that's the case. This corn crop was forecast to be the third largest in history, soybeans the second largest, and I think it's actually the other way around. I think it's corn's the second largest and beans are the third, but then, these crops may tend to get a little bit bigger, and that could put a little bit more pressure against us. So it's going to take some time to put in that harvest low, I think, but we're going to be a process over the next 3-4 weeks of putting in harvest lows before we can see something recover. So, these export sales that you mentioned to an unknown destination are certainly going to be helpful. We'd love to see corn also start to see some of this export business, especially as we continue to make new lows and as we get closer to $5.
What about on the wheat? We've had so much weakness in the wheat market here lately, and it is getting wheat sowing time. They have started in some areas, but is this a bad time to be marketing wheat?
Well, it's not necessarily a bad time because you're looking at, new crop futures has had a premium over the July contracts right around $7. So if you're starting to seed some wheat, and that's a pretty good price level to start doing some hedging risk off management on the new crop contracts. Old crop, we have had some pressure. We'd love to see some sort of retracement rally in here. If the dollar weakens, we could see a recovery in the wheat futures, and if that happens, I think we could see some really good selling opportunities for that old crop contracts as well. So the dollar is higher overnight, putting a little pressure against the wheat. The wheat market really didn't have much news. That's going to come at the end of the month with the small grains and production summary report. That's what the trade will be looking towards for more price direction for this wheat market. So, the dollar is certainly going to influence things, but as we see rallies unfold or recoveries develop, those are going to be selling opportunities over the next several weeks, especially for corn and soybeans. And wheat may get a premium put in because of the hot temperatures forecast for this week across the plains. This is not ideal. Very dry conditions, very hot, not ideal to be putting seed in the ground.
As you mentioned, the U.S. dollar index overnight, we had the September futures at 92.845, and that was up 250 some points. So we'll pause right here. And I can't wait to get your thought on our livestock trade here as we open up a new trading week. We'll be back with Brian Hoops right after this. We're back with Brian Hoops. And Brian, I want to talk about our livestock setup here for today. We had a pretty weak finish to the week on Friday. And that was after we had the USDA report that came out on the grains, and the grains turned around and reversed higher. And that seemed to put pressure on the livestock trade, mainly on the hogs, oddly enough, as we got to the end of the trading day on Friday. You said you had some news over the weekend related to one of the packing plants. Explain that.
Yeah, it just occurred overnight in the early morning hours that a JBS kill facility in Grand Island, Nebraska has reported a fire. There's a fire on the roof. And so really too early to determine the extent of damages or how long that they will be down. But this should pressure cattle futures, especially front month cattle, in early dealings this morning. So they look to open weaker off of this news, and then we'll kind of sift through some of the data as it becomes available and determine how long the plants can be down, how that'll affect kills, and maybe the market can start to recover. But at least initially, we should see some pressure against the front month cattle futures. Corn's a little bit weaker. You would hope and think that would support feeders this morning, but it's likely to be down along with live cattle, at least to start the day. And you talked about the hogs seeing a lot of pressure. I think they wiped out most of their gains that we had put in the month of July and August, trading all the way back to the lows that we saw back in the month of June. So, that hog market has really tumbled and has taken out a lot of premium in a very short period of time.
Well, let's walk through these, and we'll start with the live cattle there. And of course, as you mentioned, this is a starting point. We'll see how much the trade reacts to a possible interruption there to the packing business at that plant in Grand Island, Nebraska. So we ended up on Friday with the October live cattle showing a trade that was lower by 32 cents. We were at 123.42. The December contract was down 57, though, at 128.22. And on the feeder cattle market, that's the one that really got pounded on as we were in the cattle complex last Friday. A lot of pressure there, everything over $1 lower, and November was down over $2. Now, we had the October contract down 152 at 157.72. November was down 210, and it was at 159.12. Lean hogs, well, they suffered the most on Friday out of all the livestock trade. Over $3 lower on October, December, and February. And we had the October down 302, December down 337, closing at 76.10. Technically, that has to look a little rough.
Yeah, absolutely, it does. You've as I mentioned, raced a lot of gains over the last couple months, falling to the lowest levels since sometime in June. And so, yeah, it's a look very weak on the charts here. You can see there by your graphic on the screen that we've fallen and taken out any gains we saw in July and the month of August.
All right. Well, Brian, thanks for visiting with us this morning and providing the guidance on what may happen in the markets. Appreciate it. Brian Hoops, Midwest Market Solutions. Well, it could be an exciting day on the open. We'll find out in just a little bit. Janet, back to you.